Let's turn to Don Schneider now for some insight on how investors can or should position for any election scenario. Don, it's great to see you. And what do you make of the trading landscape today? I'm struck that everything seems to be working. It's as if both trading positions seem to be saying, here, our candidate, Harris wins or Trump wins. And one or the other, something's got to give, right?
Yeah, I agree. I mean, I think most things are working. Our portfolios have worked, very well. The classics like under a Trump administration, the companies that are exposed to China trade risk, Mexico exposure have been, performing as you'd expect, or in, say, defense industries, or whether you're looking at those tech names that you mentioned, Tesla, the renewables, et cetera. So yeah, everything is working. I would say. My concern on the outlook insofar as positioning is I think when we talk with investors, they're very focused on the Trump trade. This is reflective of a very pro-growth environment in which you'll see very expansive fiscal policy that will push interest rates higher and growth higher. But I'm not so sure that's actually the right way to be thinking about this race.
Why not?
Well, I think the backdrop is really different from back in 2016. I was working in Congress then on the tax cuts. This time around, there is no big corporate tax cut in the offering. It's about extending existing policy. So that keeps deficits in check where they are. And it actually doesn't add much to the growth impulse just to extend existing policy. Then add on to that fact, I think, trade uncertainty and a big ratcheting up of the trade war, I think, will weigh on growth, will weigh on sentiment. And then immigration changes, I think, can also weigh on growth in the short run. So when you add up all of those factors, you don't get the same sentiment boost that you did in the first administration. Then you have some of these other factors that aren't driving growth to the same.
You'd be more of a buyer of bond, and you're not an investment strategist, but you're kind of hinting that you'd be more of a buyer of bonds here when they're selling off on this weakness. I just wonder, there might not be changes under his regime on the corporate tax side, but there would have to be on the personal tax side, and that would be incredibly expensive.
Yeah, certainly. On the corporate side, I don't think much in the way we're going to preserve what we already have. I think there's reasons for term premium to grind higher and interest rates to grind higher, kind of in either election scenario. The deficit is going to be bad and stay bad regardless of what happens. On the expense side of the individual income tax cuts, yes, it's $3.9 trillion to over a decade just to preserve what we already have. Indeed, quite expensive. I think most investors expect it to be extended. And that said, when you extend what's already in place, it's not net growth stimulative and say a fiscal impulse framework. So
absolutely,
we keep deficits where they are.
What about on the Harris side? There has been talk of raising corporate taxes, and some analysis I've seen said that would be a headwind of a couple percentage points to earnings per share growth in the next few years and that kind of thing. I don't know if that's an area where you can really position one way or the other, because either corporate events or macro events tend to overwhelm those kind of changes at the margin. But would you be a seller of stocks in that scenario?
No, because I think in Harris, if she wins, she's much less likely to have full control of government, whereas Republicans are more likely to have the House and Senate. So she'd be in divided government. I think it's less likely you'd have a coalition to raise corporate taxes. Where there is an angle on corporates, I think, is on the multinational side. There's this so-called Pillar 2 agreement taxing multinationals. The U.S. Basically tax rates on multinationals, rates are going to go up automatically. That was one of the kind of under-discussed features of the 2017 reforms. So rates on multinationals go up regardless. I think there's probably more room for, a revenue extraction on the kind of multinationals, which is predominantly tech and pharma. So I'd say there's more of the risk in divided government.
Two more quick questions, and I'll let you kind of take them as you will. But one of them, I'm curious about the midterms. If you think that, regardless of the outcome today, investors should be thinking about, that event already and maybe kind of pushing us in the other direction or not. The other question is, because you came from Congress, what you think in terms of that outlook that would really mean for the president one way or the other? How much impactful policy will there be?
Between now and the midterms, I think there's, in a Republican sweep, there's extraordinary range for policy change. They're really either way. There's three major events that have to happen next year. You have to fund the government. There's going to potentially be two deadlines, depending if there's a punt of the funding deadline from December 20 of this year. Have to raise the debt limit. That creates an opportunity to discuss the spending outlook. And then you have to extend the 2017 reforms. And, when you open up the tax code, everything is on the table, including the renewable subsidies in the IRA. So I think there's tremendous scope for legislative change, but much more so in a Trump administration.
All right. Very interesting. Don, thanks so much for joining us this afternoon. We appreciate it.
Thank you.
By the way, Don, before I let you go, since you might be more dialed, Nate Silver says it's basically a coin flip. You run 80,000 simulations. I think he said Harris wins in 40,000 in 12 of them. Would you add any color or context to who you think is most likely to win based on the information you have at this point?
We've been at 55% favoring Trump for some time. I'd say my confidence over the past week has been kind of moving closer that direction, but I still think, based on the polling and everything we see, I'd rather be Trump than Harris today.
All right, Don, thanks for joining us. Don Schneider.